Hello and welcome. Good morning. You're watching Market Cafe on ET now, and well, all eyes are on the closure of the Mahakumbh rather, the grand spectacle of faith and devotion. Mahakumbh concluded yesterday with the Mahashivratri Snan. The 45-day festival, which began on January 13 this year, has seen a footfall of nearly 66 crore devotees. The regional event has managed to attract people from all squares of life and from in and around the world. The streets of Prayagraj overflowed with pilgrims, temples resonated with endless prayers, and ghats bore witness to millions seeking salvation in the holy waters. On the final day of the festivity, around 1.5 crore devotees took a holy dip at the Triveni Sangam at Prayagraj. Remember, this year's Mahakumbh coincided with a rare celestial alignment that happens only once every 144 years. Meanwhile, today CM Yogi will formally conclude the Mahakumbh 2025 and participate in a host of programs in Prayagraj during a 7-hour visit to the city. Well, on that note, let's get kick-started with our coverage for the show. And well, our markets were closed yesterday, but the world was up and buzzing. And I wouldn't be sure about calling it up, but buzzing for sure. Because let's take a look at what the US markets have done. They've ended rather flat. And the S&P 500 futures were also only little changed last night as investors digested Nvidia's latest results. Now, Nvidia shares were slightly lower even after the chip giant exceeded fourth quarter estimates on the top and bottom lines. We'll be telling you more about this earnings in a little bit more detail towards a little later in the show. On Wednesday, stocks came off the session's high as investors grew concerned about President Donald Trump's trade policies. At his first cabinet meeting, he said that duties against Canada and Mexico would take effect and that his trade war will include a 25% tariff on goods from the European Union. Now, on the back of all of this, the S&P 500 eked out just a 0.1% gain, which is very flat on Wednesday, ending its 4-day streak of losses. Well, it's very nominally in the green, but nonetheless, it was a day of flattish gains coming in for the S&P 500. You have the Dow that dropped 188 points, or about 0.4%. Nasdaq on the flip side added 0.3%. So overall, it's a very mixed day of trade coming in for Wall Street last evening, and traders will have an eye on Thursday's weekly jobless claims. But looking ahead to Friday's personal consumption expenditure price index, remember this is the most important gauge of inflation. It's also the Fed Reserve's preferred inflation gauge. So on the back of that, we can expect some volatility in Wall Street as well. But moving on from that, let's also take a look at what commodities were up to. And oil prices held at 2-month lows on Wednesday as a surprise build in US fuel stockpiles signaled demand weakness and a potential peace deal between Russia and Ukraine continued to weigh on policies. Let's take a look at how these indices have done, both your WTI as well as Brent. Your WTI is at 68.8, still below that $70 per barrel mark by quite a lot. And Brent is at 72.7, still under that 75 that we had seen it reach very recently. US gasoline and distillate inventories posted surprise builds last week despite crude oil stockpiles falling unexpectedly as refining activity ticked higher. This is what the EIA had said on Wednesday. Prospects for a peace deal between Russia and Ukraine are improving, the ING commodity strategist said in a note on Wednesday, adding that the market was also watching for potential implications of a minerals deal between the US and Ukraine. Oil prices, remember, recently have been weighed down by concerns that Trump's decision on tariffs against China and other trading partners could hamper economic growth. So while that was on oil, we also have another very important asset class, if you could call it so, to watch out for, and that's cryptocurrencies, because your crypto assets have plunged to multi-month lows. We've seen some volatility over there as well. Bitcoin has plunged 5% to $84,200. Let's see where it is. 84,887 is where Bitcoin is right now. Ethereum has hit a 5-month low, a 6% cut coming in on Ether as well. 2,345.8 per dollar is where Ethereum is right now. And crypto liquidations have also continued to mount. That is also something that is not looking good, because remember, over the last couple of trading sessions on Wall Street, you had cuts coming in across equities, and when there's a cut coming in across equities, you would expect an alternate asset class like gold or cryptocurrency to do well. But while that has been the case with gold, that has not been the case with cryptocurrency, and they have been moving in tandem with the markets. Although the markets recovered slightly yesterday, that has not been seen in cryptocurrency. So that is unfortunate When it comes to cryptocurrency, a 5-6% cut coming in on both of these major currencies, Bitcoin as well as Ether. But on that note, let's move on and address all the big global stories that we are tracking for you bright and early this morning. Let's start by talking about the latest on US President Donald Trump, because he's now reiterating his insistence towards a 25% tariff on imports, Canada and Mexico, and now adding that the European Union will also be added to the mix of countries. Remember, the European Union has a 10% tariff on passenger cars, 4 times the rate of US passenger car tariff of 2.5%. US officials have also complained about European value-added taxes of at least 17.5%. Let's move on to another economic indicator, and let's talk about sales of new US single-family homes that have fallen more than expected in January as persistently high mortgage rates sideline potential buyers. Sales were down 10.5% in the past month on account of cold temperatures. The median prices, however, rose 3.7% from a year ago. New housing inventory at its highest level since late of 2007. Meanwhile, macros don't seem to be favoring the US growth story because consumer confidence saw its sharpest decline in 3.5 years in February. The Consumer Confidence Index dropped 7 points, the steepest decline since August of 2021. And according to the report, rising inflationary expectations and tariff fears are some of the key reasons responsible for such a steep drop. Important to note here, the average 12-month inflation expectations have jumped to 6% from 5.2% in February. Meanwhile, talks of trade wars and tariffs have soared to levels unseen since 2019. Let's keep it going with tariffs, and Citi anticipates an eventual implementation of a 25% copper-specific tariff by the fourth quarter of 2025, following US President Donald Trump's executive order initiating an investigation into US copper imports. The bank expects the one-year forward COMEX copper premium over LME to eventually reflect a 25% tariff that is $2,400 per ton once confirmed later this year. Well, let's move on to the key talking point this morning. It's Nvidia earnings that have grabbed all the attention on Wall Street. They have come in better than what the street was expecting in the fourth quarter. The company's revenues in the quarter gone by were up 75%, while the full year revenue soared a whopping 114%. That's more than double. Going forward, the company has signaled a strong growth on account of robust demand for its AI chip, and the company's forecast helps allay doubts around a slowdown in spending on its hardware that emerged last month following Chinese AI startup DeepSeek's claims that it has developed AI models rivaling Western counterparts at a fraction of their cost. CEO Jensen Huang struck an optimistic note, saying AI is advancing at light speed and that demand for Blackwell is amazing, in commentary that should bode well for AI-related stocks that have taken a hit in the past week. Well, on that note, we'll slip into a very short break on this edition of Market Cafe, and we'll see you on the other side where we take you through how the Asian markets are faring bright and early this morning.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets and see what they're up to, because you do have a mixed set of cues coming in from the Asian markets. When you take a look at Hong Kong's Hang Seng Index, that's the one that climbed 3.6% in its last hour of trade, currently up just about 0.8% as of now on your screens. 0.9% uptick coming in just at this moment as well. When you take a look at Japan's benchmark Nikkei as well, that is the one that is holding on to a slight bit of an uptick, 0.1% uptick coming in for Nikkei as well. And when you take a look at Shanghai, not doing all that much, but up regardless, 0.1% uptick coming in for Shanghai. And even when you take a look at ASX 200, that's the one that's up 0.5% at this point. Now, of course, you do have on the flip side the Kospi that is holding on to a tinge of red at this point. 0.6% downtick coming in as far as the Kospi is concerned. Now, back home, of course, we shut shop around the 22,540 levels, and currently what is being penciled in, Snehi, is a rather muted start, so not much of an uptick that we're penciling in, at least at this point. Quite the mixed handover as far as Asia is concerned, but that's the picture that we have at this point.
Absolutely. So it's not looking very promising for us. 547 is where we closed day before yesterday. 596 is where we're penciled to open. Not expecting much to happen in today's trading session. In the futures, at least, we're very mildly positive. But on that note, here's everybody who's going to be joining us on the market today. Starting at 9:20, we'll be joined by Harish Krishnan, the co-CIO and head of equity at Aditya Birla Sun Life AMC. We'll be talking about how to navigate the volatility that we're seeing in the market right now and what he's liking and what he's not, given the current market setup. At 9:30, we'll be joined by Kishore Patil, the CEO at KPIT Technologies, to talk about the company's growth roadmap going ahead. At 9:40, we'll be discussing what's next for banks with Pranav Gundalape, the senior research analyst at Sanford C. Bernstein. And at 9:50, all eyes are going to be on the management of KEI Industries. Anil Gupta, CMD of the company, is going to be joining us on the back of the copper probe that Trump has announced, as well as Ultratech Cement's foray into the wires and cable space. So this is going to be an important conversation to watch out for. And well, lastly, we're also going to be discussing curtains drawn on Mahakumbh, the grand spectacle, on how the 45-day-long Maha event has helped India's economy, what the impact has been on the financials, and how it has panned out. Overall, we'll be throwing the spotlight on this mega event, and we'll be talking to a lot of people regarding this. That's going to be coming up at 10:15, so you stay tuned to ET Now all through the course of the day.
All right, then that's a power-packed lineup for you right there.
Hi there, welcome back to Market Cafe. Let's keep it going with important updates that we've been tracking for you. And the Delhi International Airport has proposed different user for economy and business class passengers. My colleague Sumit Chaturvedi spoke with the Delhi Airport CEO Videh Kumar Jaipuria to understand the purpose of the varied tariffs and how that will aid the expansion and capacity at the airports. Let's go across and listen.
According to me, this is something which is likely to be approved by EVA. If it is not approved, or if there is a delay in approval, it has got impact on the financials of DIAL, because DIAL has already invested that much amount. In fact, we have been making losses on a regular basis. So this is something which needs to be there for DIAL to actually get a return on all the investments that have been made.
You said it can erode equity also, as you were saying and explaining, and it can, but provided it is not approved, then it can erode equity of to some extent as well.
Our equity, in any case, because of the losses incurred over the past few years, has partly got eroded, and that will have impact on the overall rating as well as the kind of interest rates that we will get in case we have to borrow. So over the years since we have invested this much, I don't anticipate that there will be any challenge in terms of giving that minimal increase that we are talking about.
And if we talk about other revenue plans and expansion plans, what are the plans which are on the radar of the company when it comes to expansion and revenue generation, revenue addition?
In terms of expansion, we are constantly in touch with different airlines as well as different stakeholders, and we have traffic projections. So what we see is that we are likely to fall short of international capacity. Already our international capacity is stressed. So we are in the process of converting one of the piers of Terminal 3 into international pier. And at a later date, we will also build an additional pier in Terminal 3 called Pier E, so that the further capacity of Terminal 3 goes up. Second part that we are doing is Terminal 2, which is an old terminal. We are getting it completely refurbished. And these two steps, as of now, should take care of the next 4 to 5 years of demand projection.
All right, then let's shift focus to some other important news flow. Then the Central Board of Secondary Education, or CBSE, has approved draft norms to conduct Class 10 board exams twice a year from 2026. In fact, as per the draft, the first phase is going to be conducted in the month of February, followed by the second phase in May. In fact, Sameer Dixit is joining in with more details. Sameer, over to you.
Moving towards an important educational reform, CBSE, the Central Board of Secondary Education, has proposed a draft policy that intends to conduct the Class 10th exam twice a year. The policy has been developed on the line of National Educational Policy 2020. The policy recommends that these students will be given an opportunity to improve their performance of the board exam. Now, the draft policy has been uploaded on a CBSE website. website for the stakeholder consultation. And all the stakeholders, whether it be parents, students, teachers, or the other stakeholders, they can submit their feedback or the comments till March 9th. And it is there on the CBSE website. In addition to this, the Education Minister Dharmendra Pradhan has said that this move aims to provide a stress-free learning environment to the students, and this policy will bring a very important educational reform in the sector. Now, what are the main features of this new policy that aims to conduct the exam twice a year? So, first important feature is that the exams will be conducted twice. That is, the first exam will be conducted in November and December in year 2026, and the second exam will be conducted in the month of February and March. This will also provide the flexibility of the selection of subject to the students, and this will help to improve their performance, and it is very likely that this policy will be adopted very soon and it will be implemented.
Okay, Sameer, thanks for all of those details and thanks for joining us this morning. That's all the details on CBSE's draft on conducting its board exams twice a year. Let's see what happens and we'll keep you updated with the same. But time now to go across and revisit some of the top market voices on various themes that they are betting to navigate the market volatility. Let's go across and listen in to some of the market's most prominent voices.
Big correction, so valuations is in your favor. There is a pharma space which is really looking good. Again, in this market, there has been correction. Gold finance looks pretty good. Home finance looks decently good. Luxury real estate, is looking good. And I continue to like, the building materials. Building materials, again, I think it's going to be a, really high growth time for a lot of niche building materials.
In healthcare and all, it's more of a stock-to-stock situation. So I would kind of, pick and choose. But in general, in our portfolios, we are still quite overweight on the healthcare space also. Structurally, we are always more positive on the premium end of the consumption basket, whether it's in services or products. Services like airlines, hotels, a lot of things to do with travel and tourism and other services. And on the other premium side, you have spaces like gems and jewelry. You have high-end auto, high-end real estate, etc. So those should continue to do well.
Consumption incrementally is where one should look at not just staples but otherwise discretionary. Although that's a space that we currently do not have, but consumption in general is a place that one should look at, because this is a space which has been largely ignored over the last so many years in the large cap consumption space. Right now, it doesn't really look like commodity stocks have done so much. There's been a lot of worries around tariffs, etc. As things settle down, I think valuations over there are also looking all right. Banks is what we like, but we do not like it as much as we used to.
We upgraded post-budget consumer discretionary X passenger vehicle overall, and we, you can say, booked profit or neutralize our overweight on industrial sector. That made us overweight now on financials, consumer staples, consumer discretionary X passenger vehicle, healthcare, and real estate.
If you are lucky enough to have cash at this moment, of course, you can deploy cash when the markets fall, but most of the time investors don't have, because your portfolio has also gone down. But this is a time when you should make sure that even if you're in loss making, try to build the right portfolio for the future. Forget about what mistakes you have done in the past. This is a time to sort of realign your portfolio for the future.
One of the disappointments we have seen is also in the construction, the cap goods, maybe some of the railway defense names also, because the orders did not flow through as expected. So and this was some of the hottest sectors to kind of to bet on for the longer term. They still are. In the long term, growth story is intact, but over 6 months when there were very few orders coming in, probably we are seeing earnings getting postponed rather than downgraded forever. So that's one of the big reasons. But going forward, it does look like at the Nifty level, 10% earnings growth for the next couple of years is quite perfectly doable.
In terms of market sentiment, it's pretty weak. So it's something which has historically always led to some kind of a pullback. And I would suspect that there could be one coming. I do not know, and the tough part will be, is this something which is going to be powerful enough to take to new highs? I think that's a more difficult call to take. However, from our perspective, the way we look at things, a short-term rally is something which should be our base case right now. In fact, if you were to gun to my head, if I have to choose one, I would say maybe a rally, but not really going to all-time highs, and then maybe more range-bound or corrective action.
So interestingly, we have started getting incoming on India from long-only investors, and most of them are the sticky investor side, like pensions and insurances of the world. Kind of the value has emerged, which broad index is still not showing you, but at a single stocks level, sector level, it has becoming quite attractive enough. That's where foreign investors have started questioning. Maybe we are a few weeks or a month away where markets will find its trough, and even foreign investors will start looking market back again. The pivot or tilt that has made on the consumption side, that will again get the belief of foreign investor back that India is again supporting the consumption story. Knowing that into account, once the dust settles, people will make a comeback again in the same old spaces like financials, IT, and your consumer. Large cap as a bucket, you will see, is more biased, or you can say more heavyweights on this particular three sector.
Welcome back. Thank you so much for staying tuned in. Well, time now to get you some more news and updates. In fact, let's get to the futures and options roundup, and Ansh standing by with just that.
So let's start with Nifty first. So Nifty gave a decisive breach below that support of 22,700, 800 mark 2 sessions back at it, and it is still trading below that level only. So until we don't go back above that level, one can have some bearish hope in the market. Now, if you talk about index options, then we are seeing most active call writing has been happening at that 22,700 mark, indicating strong resistance around this level. This is the same level which was acting as a support, which has turned to be a negative now. If you talk about Nifty Bank, let's also talk about rollover, because today is expiry. If you talk about Nifty's rollover, then that is around 62.5%, which is just around its 3 series average. If you talk about Nifty Bank, then Nifty Bank continues to trade below that key support range of 48,800 mark, indicating negative sentiment in the market. Whereas if we talk about its futures market, then we are saying that it is becoming a bit of negative, because they have been doing long unwinding in Feb contract and short build-up in March contract. Let's also see index future position, and FII in the previous session, they have added some longs by around 7,200 contract. They have covered some short by around 5,900 contract, due to which the total long position stands at 17% currently as compared to 15.3%. So that has gone up slightly. Whereas if we talk about retail's position, then they have actually covered some longs by around 4,300 contract. At the same time, they have covered their shorts as well. So net to net, not much change here, because of which we are seeing the total long stands at 70.2%. So they remain neutral in the market.
Okay, thanks Ansh for taking us through all of those important levels to watch out for. Also, all eyes are going to be very closely on the entire F&O and derivative space, since it is the weekly as well as the monthly Nifty expiry today. So we can expect some volatility in the market on the back of that. But on that note, let's also take it across to my colleague Gaurav, who's joining us bright and early this morning to talk about a list of stocks that could be buzzers in today's trading session on the back of individual news flows. Gaurav, good morning. Take it away.
Well, yes. First, let's talk about Bharti Airtel, because now company has clarified that they are in talk with Tata Group, and with this they will be discussing about the merger of Tata's DTH with Bharti Airtel, and that is the reason why this stock is going to be in focus. Interglobe Aviation, yet another stock which will be in focus, because this company has signed an agreement for additional 3 wide-body aircraft with North Atlantic Airways. This will be delivered in second half of 2025, and this will be served for long-haul flights for Interglobe Aviation. Other than that, Zydus Life is going to be in focus, because the company has launched its first in India protection vaccine against the new strain of influenza virus. Other than that, Dr. Reddy is also going to be in focus, because this company has received an EIR from US FDA. US FDA has also concluded its inspection with VAI, which is voluntary action indicated, and has closed the inspection, and that is the reason it could be positive for Dr. Reddy's. Infosys is also going to be in focus, because this company has launched its open source responsible AI. This will be used by industries and companies for the use of their AI in the system. Coforge is also going to be in focus, because this company is going to consider stock split on March 4, 2025. And lastly, on the negative side, Prestige Estate is going to be in focus, because company has said that income tax department is conducting a search in the registered offices and other branches of the company, and that is the reason why we will be watching out on this company as well. So definitely watching out on all these stocks on the back of the news flow that we have received in the morning.
Well, absolutely. So that's the update coming in. As far as the stocks that we should be watching out for are concerned, Snehi. But let's also take a quick look at Jubilant then, because that is also likely to be in focus.
Absolutely. Today is Jubilant's first physical analyst meeting that's going to be taking place. It's not virtual, it's physical. So that's going to be important to watch out for. And you have Jefferies that's come out with a wish list on what the street is expecting when it comes to Jubilant's analyst meet today. On that note, let's understand first what they make of the company. They've maintained a buy rating with a target price at 1,000 rupees per share. They also talk about what's going to be important to watch out for today, because they say that the industry trends and outlook on the QSR industry is going to be important to watch out for, because remember, ever since last quarter and even this quarter, the quarter that went by, so quarter 2 and quarter 3, Jubilant has been one of the only QSR players that has seen positive SSSG growth, although things have improved for other players in quarter 3. In quarter 2, Jubilant was the only one to do so. So it's been going well for Jubilant, even though the quick commerce space has been going through quite a bit of a slump. So their outlook on the industry is going to be very important to watch out for. Also, some issues ailing the dining business and steps to revive it, that's also going to be important to watch out for. Risk and opportunities on the food platform aggregators like Zomato and Swiggy, because how much of that business, the total business, comes from these food aggregators. The likes of Zomato and Swiggy is also going to be important to watch out for, especially when it comes to the Domino's front. And while we're talking about Domino's, we have to talk about the competition in the pizza category that's sprucing up on the back of listed as well as unlisted players, because you have a lot of local players that are also jumping on the pizza bandwagon and their offerings and prices, if they're going to be hiking prices, keeping in mind the hike in input costs. Lastly, also some clarity on the mergers and acquisitions and insights on the journey of Popeyes. That's also going to be important. If they're going to be acquiring any more entities, the likes of Popeyes that they have done over the past years, that's also going to be very important to watch out for. So all eyes are going to be on this Jubilant Foodworks meeting today, and most importantly on the commentary that they have on the growth of the QSR industry going ahead.
Well, absolutely. So we'll watch out for that stock as well. But time now to get you some important commentary then. And we caught up with author and commodity guru Jim Rogers on precious metals, the US dollar, Indian equities, and much more. Let's go across and listen into a slice of that conversation.
I will not add to my gold. Silver is down, gold is up, so I will buy more silver. I do like commodities. Agriculture is better because agriculture is still a little bit depressed.
Jim, silver does well when there is growth in the world, because 50% of the total demand for silver is industrial in nature. Gold does well when there is uncertainty in the world, because it is considered to be a safe haven. So what makes you more bullish on silver relative to gold?
Just it is depressed. I mean, silver is down almost 50% from its all-time high. Gold is making all-time highs. Both are precious metals and have been for centuries. Gold is expensive. Silver is cheap, I think, I hope.
Jim, for the longest time, you've been a big believer in Indian tourism and India as a country in terms of potential. However, as an investor, you've been a big votary of China and Chinese stocks. Are we at that turn when Chinese stocks have started to revive? Because globally also the narrative now seems to be moving towards China, and there seems to be a lot of movement on that front.
Well, I will tell you that for the first time in my life, I am optimistic about Delhi. The people in Delhi seem to understand that prosperity is good, that capitalism is good. That has never, Delhi has always said that, but they've never really believed it. For the first time in my life, I think that Delhi understands the world, Delhi understands economics, and Delhi wants to make India successful. So I am optimistic about India. I am optimistic about the Indian markets. I'm even optimistic about Delhi for the first time in my life.
What anything in India, though, because we are seeing a huge amount of FPI and FI outflow from the country, and it's lasted for over a year now, Jim.
Well, that's fine. I hope that makes things cheaper. If you want to be a successful investor, you have to go against the crowd. Now, maybe I'm wrong. I've made many mistakes in my life. But in my view, it is time to put money into India the next time it's depressed.
So what would you buy in India? Considering, it all has fallen and valuations are pretty ripe, or rather pretty cheap, I should say, across the board, across market caps, across sectors and stocks.
Well, it will depend on what goes down the most. If you tell me what's going to go down the most, that's where I will look. I want to buy cheap. Certainly, agriculture in India is cheap, but
Okay, important word coming in from Jim Rogers. On that note, let's move away from markets and tell you everything that's been happening latest. And let's talk about technology first. Let's talk about Instagram, because the Meta-owned company, Instagram, is considering the launch of a separate app for its short-form video feature, Reels. It is aiming to provide a similar video scrolling experience like TikTok. And this comes amid TikTok's uncertain status in the US. However, Meta did not immediately respond on the reports. Let's shift focus, talk about the European Commission President Ursula von der Leyen. She will pay an official visit to India for 2 days at the invitation of PM Modi, and she will be accompanied by the EU College of Commissioners and will hold talks with PM Modi and senior Indian ministers. The main focus of the talks will be free trade agreement and the EU-India Trade and Technology Council. So let's focus, talk about politics then. And even as Aam Aadmi Party MLAs remain suspended in the Delhi Assembly, the newly formed BJP-led government is set to table the CAG reports on Kejriwal's liquor policy and state finances today. These reports are expected to reveal financial irregularities during the previous AAP government.
Alright, then let's keep an eye on the sky, because India records temperatures above 40 degrees Celsius for the first time this year, with heat waves expected in coastal areas. In fact, February sees highest mean temperatures since 1901, while season's highest maximum and minimum temperature has been recorded today in Delhi as well as Mumbai. Moving on then, in a major blow, England was knocked out of the ICC Champions Trophy after they suffered an 8-run defeat against tournament debutants Afghanistan in a Group B match. Opener Ibrahim Zadran smashed 177 off 146 balls, the highest score in the tournament's history, while Pakistan and Bangladesh are going to be facing off to conclude their ICC Champions Trophy campaign just today. In fact, the inconsequential game also offers a chance to the two teams to reclaim some pride before exiting the tournament.
It's going to be an interesting match to watch out for, because either way there are going to be no winners, because both of these teams have been relegated from the tournament. But on that note, we'll wrap it up on this edition of Market Cafe. From Shansi, me and the team that put this show together, thanks so much for watching. The market is up next.
If you like this video, then like, share and subscribe to ET Now.